Hey folks, Dan Frio here with your market update for December 13th, 2024. So the thing we're trying to do right now is trying to figure out what the Federal Reserve is going to do at next week's meeting, because they're meeting in 5 days. We're going to have a live event on this day so you guys can understand once the Federal Reserve does come out what they're going to do. We're going to see market reactions, because remember back on September 18th, they cut rates by the biggest cut they've done in a long time, and mortgage rates basically went up every day since from their day, that date to the date that they cut the next time. So we're trying to figure out is what projections or direction the Federal Reserve is going to take it. So right now, here's what the probabilities are on another rate cut. Right through here, you're seeing that on the probability chart. So in December 18th, which is next week, 97% chance they're going to cut rates. So folks, they're going to cut rates. You're seeing it right through here. Federal Reserve is likely going to cut rates next week, and here's what you can expect to happen. So this I'm going to give this article, though. We're looking at CNBC right now, and we always go through the information they provide, and I always try to give you a thumbs up or a thumbs down on the accuracy of this information. So let's break it down to see how accurate they are with the information. So this right through here, it says the Federal Reserve is likely to cut rates for the third time when it meets next week. I'm going to have to agree with that. Consumers could see some of the borrowing costs coming down. I can go with that. But the thing is, they control short-term interest rates. And if you watch my channel on a daily basis, you understand they only control the federal funds rate, which really is no interest rate that you and I pay. It's just interbank lending. But here's where I kind of don't really agree with what their context is. It says from credit cards to car loans and mortgages. Okay, so that's right through here. Mortgages are not tied to what the Federal Reserve does. Okay, it's actually tied to a mortgage-backed security that we're going to look at right through here in a minute. So right now, the mortgage-backed security is down 32 ticks. Not sure why. I'll give you more of the data that we have coming in today, but this is actually the bond that really controls mortgage rates, and I'll go over that again in a second here. But let's get back to the calendar that we have on the economic calendar for this week, that the Federal Reserve, this is the last information that the Federal Reserve is going to see before they come out with their policies next week. So let's look at the inflation and the employment numbers that we saw this week. There was really nothing out until Wednesday and Thursday, and that data is right through here. So we had CPI, which is consumer inflation. This is month over month. It was previously at 0.3. They expected to come in at 0.3, and it came in right at 0.3. So no shock there. The CPI year over year, YOY, that's what it's showing you right through there. Last reading was 2.6. They expected it to bump up to 2.7, and it did. So that wasn't a shock in the markets as well. So that's what we had throughout that section there. Then yesterday, we had a couple different things right through here. Initial jobless claims, that was a little bit higher than expected. So this is basically what's going to solidify the Federal Reserve cutting rates, because unemployment rate's starting to go up. But we had producer prices. So the producer inflation numbers actually were expected, previously they were 0.3. It was expected to come down to 0.2, and then actually doubled from the projections to 0.4. But this didn't have much of a reaction in the markets as well. And then you go to the 30-year bond auction that we had yesterday. Pretty good news there. The last reading, it took a 4.6 yield to get rid of all these bonds, but this time it only took a 5.53 yield. So 0.07 interest rates lower. So even in the bond markets, they're projecting lower interest rates going forward. You come over to the U.S. Treasuries, and they're hovering right around 4.3 right now. It's a little bit higher than where we were over the last couple weeks, but it's starting to settle down right now. So there is still no reason for the MBS market right now to be down 33 ticks from what I'm seeing. Some of the only information that came in today that could really skew the market was just import and export prices. They both were in line. So that's not doing it. And then there was one other report right through here. It says delinquencies in mortgages are notching up. But here's what it has to say in this broad section. This is what I've been telling you guys for years. This will not see a surge in foreclosures that would significantly impact home prices. Why? Mortgage lending is much better, and people have a ton of equity in their home. So if you're still sitting on those sidelines waiting for that housing crash, guys, you're not going to get it. We will have a special report that we're working on in two regards. We're coming out next week with a Florida edition, condominiums on the East Coast, basically from Daytona all the way down to Miami. We're going to let you know how that market is faring, and then I'm going to have my 2025 forecast in real estate coming out next week as well. So that's what we've been working on behind the scenes. So check out those special events next week. And then we will also be back on Tuesdays with Stock Talk Tuesdays. We'll be doing that later in the evening. But looking at mortgage rates right now, we have the MBS market down 33 ticks. That means mortgage rates are probably going to go up about 1/8% today. Let's see how much it moves so far today. We're up 5 ticks. There might be some more room to run right through here. So we might be back at 7%, unfortunately, in the near future. So So we'll continue to watch this, but you guys also understand the Federal Reserve is coming out next week, and that will be a big week for financials as well. So thanks for watching. Sorry I've been a little sporadic this week. I've been traveling in Florida, trying to do some research on some videos that we're going to do, as well as taking some time with the family. So that'll be my report for today. God bless. Thanks so much for watching, folks. I will be back full-time next week, so you guys can check out the opening and closing bell each day, as well as our live report. So if you got any questions, please reach out to me at therateupdate.com. Here's our website. If you want to put in that application for your first loan, you can hit the apply now button. What we try to strive for people to do is click the schedule a consultation call, because we want to know your story, and you want to work with somebody that wants to know your story and is going to work with you. So please click this. If you'd rather call us, just scroll down to the bottom of the website and you're going to see that information right through there. There's our 800 number, as well as my email address, and yes, it will be me responding in those emails. So thanks for watching, folks. God bless. Have a fantastic weekend. See you back here on Monday. Bye-bye.